Hey guys, welcome to another episode of Suits and Boots Legal Talk. It's all about corporations today, so stick around. We're going to talk about it. Hey guys, welcome to another episode. Thanks for joining me again today. So today, we're talking all about corporations. So we at the law firm do a lot of LLCs, corporations, filing articles, things like that to get people started in their business. Maybe you've got the dream of starting your own bakery, or maybe you've got a dream of starting your own dance studio, or who knows what it might be. But it seems like everybody nowadays has a passion for something. And one of the best ways to do that and protect yourself is to create a company to do that through. So in the real estate world, where I do a lot of my work, we form companies all the time to hold and manage real property. And there's a lot of considerations that you need to think about if you want to form a company. And that's what we want to go through today. So we want to talk about what are the things that you need to think about when starting your business or your company, whatever that is. One of the things that we need to talk about and that you need to think about is the name of the company. And that's probably the very first thing that you're going to have to decide. So if you call me and you say, hey, Luke, I want to start an LLC to do my heating and air work through. One of the first conversations we're going to have you got a name picked out? And you might say, well, yeah, it's going to be Smith's Heating and Air Conditioning. And then we're going to talk about, well, that's probably not going to work. I can check, but it's probably not going to work. And the reason I say that is we have to figure out a name that's unique to you in North Carolina. So if you're a North Carolina person and you're watching this video and you want to start this company, we have to register your company with the Secretary of State here in North Carolina. And to do that, we have to have a unique name for your company. So it might be, with real estate, sometimes that's really easy because a lot of our real estate clients will use the address for the property. So 123 Broad Street, Statesville, LLC, or something like that. And that's pretty unique. It's hard to find another 123 Broad Street, Statesville. So there's probably not one created at the Secretary of State's office. But if you want something like Smith's Property Management or Jones Real Estate or something like that, it might be a little more challenging. But we can check and we'll see. So typically what I like to ask people to do is either we'll look together, and if we're in a consult or something like that, we can pull that up on the Secretary of State's website really quick and figure out, hey, is this name going to work? But also, we might just say, hey, why don't you give me 3 or 4 names that you like, that you're thinking about, and let us check all of those, and we'll find one that works for you. And if none of them work, we'll obviously have to have a conversation again. So we're thinking about, okay, what is the name we're going to use? In thinking about what name we're going to use, you also have to think about what kind of industry you're going to be in. So, for instance, we had a company here a while back that we tried to form that had the word forestry management in it. Well, if you want to be a forestry management company, you have to have a licensed forester as part of your company. And in doing that, you need to check with the Forestry Service in North Carolina to see if they will approve the name. Same thing for law firms. So we are Benbow, Davidson, and Martin, PC. That's professional corporation. And whenever we want to change our name or whenever we choose our name, we have to get it approved by the North Carolina State Bar. Similar rules apply if you're a medical professional. So if you want to create some chiropractic LLC or whatever, and it would be PLLC because it's a professional limited liability company, then you have to have that approved by the licensing organization for the medical field. So all those things go into picking a name and choosing a name. Now, if you're just doing a bakery or something like that, probably not any name approvals are going to be required. Heating and air companies don't have to have their names approved by their licensing boards. But for professional corporations like accounting or legal field or medical field, you're going to have those names approved by the licensing organization before the Secretary of State will approve it. So we've kind of got through the naming structure. Now we got to decide what kind of entity do you want to be? And what in the world is this word entity? What does that even mean? So in the legal world, we talk about people as in living, breathing human beings, but then we also have this kind of word where we talk about what is a person. And it seems like such a such a weird thing to talk about, but it's things that lawyers talk about. So you've heard this saying, and I think it was popular in one of the political campaigns, that corporations are people too. And to most folks, they're like, what? No, that's not true. But in reality, in the legal world, corporations are people too. In other words, they're parties. So they exist separate from their shareholders, or separate from their members, separate from the people who own them. So if Luke Martin is an owner of Benbow Davidson and Martin, Luke Martin is separate from Benbow Davidson and Martin. I think we all can sort of grasp that. That's the entity is Benbow Davidson and Martin, completely separate from its shareholders, its owners, or its partners. So when we talk about entity structure, we're talking about how do you want to organize that company? How do you want to organize that entity? And there's several options. So one option that we have, and probably the simplest and most prolific in a lot of ways, is the sole proprietorship. It's just Luke Martin goes out there and doesn't create an entity or doesn't create any kind of business structure and starts doing law as Luke Martin, attorney at law. That's it. Well, that's it. It's just Luke Martin. Or goes out there and starts doing Luke Martin heating and air. And it's just Luke in a truck going out and working on people's air conditioners. In that case, it's really simple. It's really straightforward. It's just me. There's no legal structure. There's no corporate headings. There's nothing. It's just Luke doing Luke things. We tend to push people away from that structure because of the liability risk. So if Luke is going out there and Luke is doing all of the work, Luke gets the blame. Luke gets the liability. So there's no corporate entity between me and the work that I do to protect me personally from liability. So just as we were talking about earlier, where that entity is separate from the individual in a sole proprietorship, that's not the case. The individual is the entity and the entity is the individual. It's all the same thing. Therefore, liability, finances, everything is all mingled together, and all of it is subject to the liability that comes from just operating a business. Now, stepping up in complexity just a little bit, you go next to the partnership structure. So partnerships are where maybe Luke and John get together and decide, hey, we're going to start this company doing tree work, and we're going to go out and cut people's trees or whatever. So Luke and John just decide to start working together. And now they may not have any corporate formalities. They might not write anything down. They might not have any kind of agreement between the two of them at all. But in agreeing to work in Luke and John's tree service, they have formed a partnership. So partnerships work where where two or more people decide to work together for a common purpose. So in this case, these two guys are working together. And one of the problems with a partnership, one of the major problems with a partnership is both partners can subject the other partner to personal liability. So either partner, if John goes out and does something and messes up on a job, that's going to subject Luke to that same liability. If Luke goes out, does something on a job and screws up, that's going to subject John to personal liability because they have just decided to work together as individuals, and there's no corporate structure above them that governs the way they work or that they are working under for any kind of liability protection. So a partnership is like basically two sole proprietorships working together. So now not only is the partner or the sole proprietor liable for their own actions, now they're also liable for their partner's actions. Ooh, that is just scary. Don't do it. No attorney will recommend it. It's just a terrible, terrible way to operate your business because it opens you up to so much more liability than any other structure, really. You would be better off to be a sole proprietorship than to be partners. Now, isn't that weird? Here's an attorney who's a partner in a law firm telling you don't do partnerships. And that's a weird thing. So partnerships in law firms, it goes way back because it's tradition. We call ourselves partners when in reality, partners in a law firm are almost never actual partners. They're usually shareholders or members or there's some corporate structure that governs how these law firms work, how our law firm works. We are a professional corporation. So the partners in the law firm aren't actually partners at all. It's just the word we use to designate partners separate from associates or owners separate from employees. So being a partner in a law firm just means you have some type of ownership interest or you've been promoted in some way over just an associate or just an employee at the law firm. So partnerships, we tend to push people away from those. Now, there are two different types of partnerships, and one of those is generally okay. The kind that we've been talking about up until now is really a general partnership. So it's where these two guys just get together and decide, hey, we're going to work together for this common purpose. There's a limited partnership that has corporate formalities, and limited partnership is a structure in which you may have limited partners, meaning partners who have really little to no control. They have a little bit of control on things like declaring bankruptcy or maybe selling off all the assets of the partnership or something like that, but they almost have zero control. And then you would have a general partner in that limited partnership. So limited partnership, you have limited partners, very little control, very little liability, and a general partner who basically runs the partnership. These are sort of rare. We don't set these up very often, but you do see them, especially in some circumstances where you might have a real estate investment fund or something like that set up as a limited partnership. But it's not very common. So as we move down the list, I'm going to save LLCs for last because those are one of the more prolific entity structures that we see. And today, and we're going to talk about incorporations next. So whenever we ask people, what type of entity structure are you if you have a company, then a lot of people will say, oh, we're a corporation. And it's like, well, what kind of corporation? And they say, oh, we're an S Corp or we're a C Corp. And and then we still have to dig in because we've talked about sole proprietorships, we've talked about partnerships, but if you're incorporated or you're a limited liability company, you're still incorporated in some way. So you're either an LLC or you're a corporation. So if you're a corporation, then that means you have shareholders, and that means you have bylaws. That means you have registered with the North Carolina Secretary of State or some state as a corporation, as opposed to an LLC. And we're going to talk about those differences here in just a little bit. So corporation, most people think about corporations, they think about C Corps and S Corps. Ultimately, whether you're a C Corp or an S Corp has nothing to do with being a corporation. Isn't that weird? We all think about C Corps and S Corps as, oh, how are you organized? Oh, I'm a C Corp. Okay. Or I'm an S Corp. Okay. Well, all that means is when you say you're a C Corp or an S Corp is the taxation that you've chosen to be taxed under. So you've either chosen to be taxed as a C Corp or you've chosen to be taxed as an S Corp. And all corporations begin as C Corps with the IRS. You have to make what's called an S election to be taxed as an S Corp. And we're going to talk about that in a little more detail toward the end of the video. So stick around. We're going to talk about the differences between those two. But if you're incorporated, that means that you have certain corporate formalities that you've agreed to follow. You've agreed to have shareholders, so you don't have members or you don't have partners, you've got shareholders. So this is what you think of when you think of Apple and some of these big Ford Motor Company or some of the big companies like that. These are corporations with corporate shareholders who go through a lot of corporate formalities. Now, that's not to say that you can't use these structures for small companies. And in fact, a lot of companies do use these structures in smaller scale businesses. But it does mean that there are a lot of corporate formalities that you need to be aware of So you do have to have shareholders. So that's a little bit different than an LLC. You do have bylaws. You do have boards of directors. You do have to have annual meetings and things like that. And you have to keep these corporate formalities in order to maintain your limited liability structure. So these are there's some restrictions on how incorporations can operate as well. And these are things that folks need to think about as they're thinking about what type of entity do I want to be? Do I want some rigid rules? Do I want to be governed very strictly and very heavy-handedly? Or do I want more flexibility? So corporations are very useful, especially for companies that think they may want to grow in size. Or if you ever, and if this is you, if you're watching this and you ever think you want to be traded on the New York Stock Exchange, come see me, because we want to help you for sure, because that's going to be one of the largest companies in the world, and you will want to be a C corporation. You will want to be taxed as a C corp if you ever want to be traded like that. So as we're moving down the list, now we're going to get into what's probably considered by one of my law school professors the king of the hill when it comes to entity formation, and that is the limited liability company. And there's a big reason for that, and that is the operating agreement. So we've talked about sole proprietorships, we've talked about partnerships, we've talked about being an incorporated company. So that would be, the incorporated company would be like Luke and John Inc. Whenever you see that, you know, okay, that's an incorporated company. Now we're going to talk about LLCs. And LLCs have kind of risen to the top when it comes to entity structure for one very big reason, and that is the flexibility that LLCs offer. So LLCs are governed by what's called an operating agreement, where an incorporation is governed by bylaws, shareholders, and board meetings. The LLC is really governed by the operating agreement. So an LLC could be created by one or more people. It doesn't have to be multiple people. It could be just one guy or girl who says, hey, I want to create this company. I want to name it whatever, and I want it to be an LLC. So then we create the LLC using what's called the Articles of Incorporation, which we file with the North Carolina Secretary of State to initially create the company. And then we do what's called an operating agreement. Now, the great thing about an LLC operating agreement is it is so flexible. The parties can basically decide, hey, we want this company to be governed like this or this or this. I mean, the sky's the limit, really, when it comes to how to govern an LLC. And you guys can pick it. With the incorporation, there's some really rigid rules that we have to follow. If you're going to be a corporation with shareholders, we just have to follow these rules, and there's not a whole lot of flexibility. In the LLC world, there's tons of flexibility. So if you've got multiple members and you want one member to be what's called and that's one difference between the corporation and the LLC is we have what's called members. So if you're a member of an LLC, you're not a shareholder, you don't have shares, you have a membership interest. So your membership interest in an LLC may be 10%, maybe 5%, maybe 1%, maybe 100% if you're the only member in the LLC. But you can have multiple members in that LLC, each holding different percentages, and you can convey those membership interests very easily, much like shares. So you can convey those to other people, and you can assign those, and it's fairly simple. You can also put in that operating agreement, you're also going to have language in there about how you handle buyouts. So if one member wants to exit the LLC, or if one member passes away, how do we handle that member's interest? All that is governed by the LLC. Or by the operating agreement. So the operating agreement is also going to determine whether this LLC is member managed. In other words, the members of the LLC, the shareholders, if you will, the members of the LLC manage the day-to-day operations of the LLC. Or is this going to be a manager-managed company? In other words, the members of the company own it. They own that LLC. They are the members, but they really don't have any membership or any management duties in the day-to-day activities of the LLC. The manager takes care of that. So the members hire a manager, and that operating agreement you guessed it, is going to handle and describe the process for how we choose this manager, the manager's role, the member's role, and how those two work together, how we maybe fire that manager if we need to. That's exactly how that's going to work. So we're going to decide all of these things in the operating agreement when we create the entity. So we get a lot of flexibility with the LLC that we don't get with the incorporation, plus we get the liability shield. We haven't talked a whole lot about what that is yet, but in incorporations and LLCs and limited partnerships to a degree, we get what's called a liability shield. The LLC stands for Limited Liability Company. So basically what happens in these structures is you create this entity, whether it's Luke and John Inc. or Luke and John LLC, you create this entity that now the entity goes out and contracts with people to cut their tree or fix their air conditioner. And now whenever something goes wrong, you have the entity between you and your customer to protect you from the liability. That's really great. Not that we're trying to keep the customer from being made whole if something goes wrong, but the entity itself can purchase insurance. It can have its own vehicles. It can have its own tools. It has everything it needs to do its job separate from the person who's doing the work. So the person who's doing the work, especially if you're an employee of a company, you might be out there doing a job and you don't have any ownership interest in this company. You're just working for Luke and John LLC and they told you to go do this. Well, what in the world is going to happen if something happens on that job and there's no entity structure? Well, the person doing the work is going to be on the hook. So in this case, we've got this entity structure, whether it's an LLC or a corporation, and that entity structure bears the brunt of the liability. That's not to say that the owners of that entity are never subject to liability. It's absolutely possible. And when we sit down and talk about these entities and, hey, do you want to create one? Well, here's some things that you really need to do. Even in an LLC, you need to observe certain corporate formalities. You need to make sure the bank account for the LLC and your personal bank account are kept separately and the finances are managed separately. You need to make sure that the members are acting like members of a company and not like individuals or partners. When that happens, a lot of times the LLC may, or the incorporation, either one, whether we're talking about shareholders or members, may be treated as partners if that's the way they treat the company. So we need to make sure and keep this company separate from the owners or from the members, or else there could be big problems if the company is ever sued. So just kind of keep that in mind. But these structures do provide a liability shield and a vehicle for people to get together and work toward a common purpose, a vehicle where we don't have to all individually have our own insurance policies. We don't have to all individually buy our own vehicles. We don't have to all individually have our own tools. The company can buy those things, can provide those things, and can really create a structure to create a cohesive, forward-thinking and forward-moving path for us to do what we want to do. So whenever we're thinking about that, the last thing I want to talk about today is probably the most boring, but one of the most important, and that's tax considerations. Fortunately, with an LLC and with incorporations, but especially with LLCs, there's this thing called check the box. Basically, with an LLC, you can choose to be taxed however you want to be taxed. So if you want to be an LLC but taxed as an S Corp, which is really, really, really common, you can do that. And there's a lot of advantages to that. There's a lot of benefits to that. If you're an LLC and you are a single member LLC, meaning you're the only member of that LLC, it's going to be pass-through taxation. So what that means is you are taxed through the LLC just like you were being taxed individually. So it's not it's really simple. It's just super straightforward, but you can choose other taxing structures. If you're a multi-member LLC, the default rule is going to be for partnership taxation. And partnership taxation is it's a little convoluted and it's a little difficult, but it's basically pass-through taxation. that whatever income the entity has is just automatically attributed to the partners in there or to the members. But we're talking about partnership tax. Oh, this stuff can be so confusing, right? It's no wonder that accountants and lawyers have gray hair. So you have these partnership tax rules that may apply to an LLC. All that means is that the members of the LLC will be taxed just like they were in a partnership, but they're really in an LLC. So you get all the benefits of an LLC, but you get partnership taxation. Or you may choose in an LLC to be taxed as a C Corp. Now, a C Corp means that the business itself is going to pay taxes. So in pass-through taxation structures, the business pays no taxes. The tax liability passes through, that's why it's called pass-through taxation, to the members or to the shareholders of that corporation, and they cover the taxes in proportion to their ownership interest. So if you own half of the company, you're attributed, or 50% or half of the profit for the company passes through to you. If you own 3/4, same thing, 3/4 of the profit. Whatever your ownership interest is, that amount of that income will pass through to you. So if you choose to be taxed as a C Corp, though, that taxation stops at the entity level. So the members or shareholders would not have any tax liability for the income of the company. That may be a good thing if you want the company to gather a lot of money and hold a lot of money, and you don't want to distribute very much. The problem with C Corp taxation, and let me say, the good thing about C Corp taxation is the corporate tax rate right now is fairly low at, I think it's 21.5%. We'll see what that does in 2025. We're recording this in 2024. 2025, I think some tax breaks are set to expire with the presidential election. We just don't know what'll happen. But right now, the C Corp tax is, the corporate tax rate is fairly low. If that stays the same and the company gathers and you have a C Corp, that company continues to bring in money, that tax rate is going to be pretty low. The problem is, if you want to distribute money out of that C Corp to the shareholders, that distribution will be taxed. So the company gets taxed, and then any money that you take out of the company also gets taxed. So for that reason, you get a lot of people who don't want to be a C Corp because you get double taxation on any money that you take out. It's been taxed when it comes into the company, and then it's taxed when it goes out of the company to the shareholders. The last one I'm going to talk about is S Corp taxation, and this is one of the simplest, and it's one of the more common tax structures that we see. So S Corp taxation just means that the income passes through the company. Now, S Corp taxation has a few limitations, and one of those is that you can have no more than 100 shareholders, and most of the time that's not going to matter. But it does matter if, say, Luke and John form Luke and John LLC. They want to be taxed as an S Corp. They've only got 2 members. That's no problem. But if Luke and John LLC now brings in another member that, let's say it's, I don't know, Luke and Scott LLC, but Luke and Scott LLC has 100 members, well, now we've got a problem. So all of those membership interests from any of the shareholders of the LLC will count toward that S Corp taxation. So just kind of keep that in mind. It's probably not going to be a big deal for most people watching. The other thing is you can't have what the situation that I just described wouldn't happen, because you're not going to have a corporate shareholder in an S Corp situation. You can't be taxed as an S Corp and have a corporate shareholder. So that's going to be another drawback to that particular tax election. So all these things are things that we need to keep in mind, especially when it comes to taxes. Most of the time, what we'll do as a law firm is loop in whoever your tax professional is. So if you have someone who does your taxes, and I recommend that unless you're the accountant or unless you really are comfortable with this stuff, if you're going to form an entity, if you're going to create a company, go ahead and build your team. Go ahead and get a good attorney, get some good legal counsel. But with that, get a good accountant. Get a good person who does your taxes, who can work to help you decide, okay, Do I want this thing to be taxed as a sole proprietorship? Do I want to be a partnership? Do I want to be an S Corp, a C Corp? How do you want to do this? What structure do you want to use? Let's get everybody involved in the conversation, and we can do what's absolutely best for you. There's all this stuff sounds really complicated, but there's tons of people around that know it, that understand it, that can help you decide and make the best decisions. And one of the things that we really pride ourselves on at the law firm is we help you create the company, but we want to help you grow that company. We want to help you make connections, and we want you to be successful, because when you're successful, you'll bring us more business and we'll be more successful. So we can all work together. We all want to be part of your team to help you build this thing up. So if you're thinking about starting a company, give us a call. Let us help. And don't forget to like and subscribe to our YouTube channel, our Facebook, all these platforms that we're on. We just want to help to get more content, more information into your hands so that you can be more successful. So thanks so much for watching, and you guys have a good one.
The information contained in this video and audio recording is general in nature and should not be relied upon in making legal decisions. Every situation is different, and you should consult with your attorney before making any legal decisions.